Hey, what's up, everybody? Welcome back. We're going to explore the market news today. We got Jerome Powell speech to talk about. We got to talk about what Walmart said. We got retail sales data, PPI data, industrial production, initial jobless claims, and then we're going to end off talking about stocks. So we got a lot to cover today, starting off with Jerome Powell. So he had a speech talking about the economy and issues on monetary policy. And something to mention is that Jerome Powell said that the world is entering an era of more volatile inflation with more frequent and potentially more persistent supply shocks. A difficult challenge for the economy and for central banks. Something to mention about supply shocks is that it raises prices and damages growth at the same time. So this really reinforces their approach to really just sit around and wait and see, and not to mention all of the pressure to cut, especially from Donald Trump towards loser Jerome Powell. And think about it, if you've probably had your parent, or you've maybe been the parent where they're like, can we go to the park? Can we go to the park? Can we go to the park? And you're like, no, no, no. And they just, can we go to the park? Can we go to the park? And then you're like, no. So that's pretty much what's happening with Jerome Powell right now. Pressure's on for them to cut rates, and they don't want to cut rates prematurely. So that leads them to really want to stand their ground and tell everybody no. And that's what we're seeing from them. Then we got Walmart, who says that we got earnings from Walmart today, and they slightly beat earnings. Adjusted earnings per share of 0.61 cents, so 61 cents versus the 58 cents expected. So they slightly beat earnings. But they mentioned that they warned that they'll have to raise prices starting this month and into the summer because of tariffs are still too high. They didn't share a profit forecast for the current quarter, which scares some investors out there in the marketplace. And they also mentioned that they'll absorb some of the costs, but the consumers are going to also absorb this cost with them. Consumers in the latest quarter shopped cautiously as they have the last few years because of this inflation. And Walmart's been seeing that high income households in the US are now choosing Walmart. So we're seeing that down trade. So high earners who maybe have shopped at Target in the past are now shopping at Walmart. And some people are choosing the cheaper alternative, the substitutes for the name brand products in the stores right now. Groceries are insulated from tariffs, but levies on countries like Costa Rica, Peru, and Colombia puts pressures on the prices for bananas, avocados, and coffee. And these tariffs that we have imposed on China impact costs of toys and electronics. So Walmart warns to brace for higher prices. We also got retail sales data out today, which was slightly up in April. It rose 0.1% from a month earlier, matching expectations. That was a big drop from the revised numbers we seen as 1.7% in March, which was the biggest increase in more than 2 years. Tariffs are the spotlight in April. A lot of people try to front run these tariffs, which really contributed to the retail's spending we've seen, but still spending is at sufficient levels to keep the economy growing. People are also expected to save more now, and some of these stars that we've seen are restaurants and home improvement. And I thought home improvement was interesting because maybe people aren't wanting, like, they need to buy a house, but they need a better deal, so they got to buy these fixer-uppers, and that leads them to go to Home Depot and Lowe's to renovate and repair, and also the investors who are out there flipping homes. So I just thought that was interesting. Now, we also got some wholesale inflation data. We got PPI, which measures wholesale inflation. And in April, we've seen the largest drop since 2020, dropping by 0.5% last month. And the main contributors to this were egg prices and gasoline. The rate of wholesale inflation fell to 2.4%, down from 3.4%, which is the lowest since last fall. This just suggests slowing in the economy. And what's important is that these two data sets help compile PCE, data when we get it, and that is the Fed's preferred barometer of inflation. That's what the Fed watches. They don't necessarily watch CPI inflation data. They like watching personal consumption expenditures, and they're expecting this to start coming in soft. Next, we got industrial production data we got out today, and that was flat for the second month. Missed consensus forecasts for I believe forecasts were, yeah, it came in at a 0.1% rise according to the survey by the Wall Street Journal, missing consensus. And manufacturing, which makes up 3/4 of total production, slipped 0.4% in April, suggesting uncertainty and supply disruptions from this trade protectionism. Now, jobless claims held steady in the latest week. So they held steady at 229,000 versus the estimate of 226K estimate, and this was ending May 10th. The number of unemployment, number of people collecting unemployment benefits rose by 9,000 to 1.88 million people. Claims, these claims show that there are claims that companies are hoarding labor because of the shocks they seen during the pandemic, because it got to the point to where a ton of people wanted to spend money, but there just wasn't enough people to help service these goods and services that consumers were wanting to buy. So that kind of left this imprint on businesses to want to hold on to labor. It's always a little easier from a company's perspective to hire more than you need, and then you could always lay off some in the future rather than trying to find people when it's too late. Gradually, a gradual climb in these initial jobless claims are expected as we continue into the year. Everybody's going to be watching these June and July numbers, and there's this article right here. Is the labor market wobbly? And this is an opinion piece, and it says of the 177,000 jobs added, the healthcare and social assistance sector accounted for nearly a third of the gains. And this narrowing base of job growth should raise serious concern. A labor market overly dependent on healthcare hiring isn't a sign of economic vitality, but of such fragility. Such sectorial concentration may mask underlying weakness in consumer demand, private investment, and public sector support. If healthcare currently went down by demographic trends and structural demand falters, the broader job market may have a little cushion. Without more balanced and broad, Boyd, I didn't know how to say that word. Without more balanced and broad-based job creation, the risk of a stalled or uneven recovery grows, particularly if external shocks or policy tightening intensifies. So everybody's watching the job data, and there are opinion pieces coming out, and people are going to be watching the data on the economic calendar come out. So just keep your eyes on this, because this is what the Fed's watching, this is what investors are watching, this is what economists are watching. Now let's talk about the stock market, because it has been positive for a while. So there's been strong price momentum in the stocks, and the day graph market breadth both point to higher prices ahead. And the VIX fell to 20 from 40, which is another strong sign for stocks. But with the VIX being at the bottom of its Bollinger Band, such conditions don't usually last. It usually goes up and down. Everything trades, right? Now, the US market has arguably risen too quickly and is due for some type of pause or stall, or even back to a downtrend, because everything doesn't trade up or down in a straight line. Now, broader market breadth indicators have been a little weak, at least here in the short term. And what market breadth measures is, here, I want to make sure I got this right. Market breadth indicators. What that measures is the number of advancing stocks compared to declining stocks in a stock market index. Positive breadth indicates bullish momentum, while negative breadth suggests bearish trends. Now, when only a couple companies are carrying an entire index, like the QQQ, for example, the NASDAQ 100, say all of the stocks are down, but Nvidia is going up, and that's what's bringing this index up overall, even though all of the other 99 stocks in this index are down. That's a low market breadth, just for context. Now, the broader market breadth indicators have been a little weak. That's bad for the short term, or at least a concern. And then another one is that the fear and greed index recovered from a fearful reading to a greedy one. Now, when there is greed in the market, that's not a good sign, at least here in the short term, like we were saying. And then if we head into a recession, then there are now liquidity concerns because everybody was greedy and now everybody wants out at the same time. The put to call ratio fell to 0.7, which is the lowest since February 14th, when stocks were shy of record levels. And that's right before we seen that sell off happen. Friday has a big expiration for some calls in May, and this could lead to a stall just depending on what all happens, because it there has been a lot of bullishness in the marketplace, but if this expiration happens, it could be a sign of a stall in the future. Also, just to mention, the US dollar has weakened quite a bit, and we could see this in this bottom left graph. This is the DXY, that's the US dollar. And there are a few reasons as to, or ideas about why this has happened, but some look at the cross border of investor flows as an outlook for US growth being weaker. So they're looking elsewhere, they're getting out of the US dollar, or the US dollar is weak because people are spending the dollar to buy US equities or Bitcoin. Maybe here, let's see what gold's doing these days. XAU USD. Yeah, so they could be buying gold. They could be buying anything else but the US dollar, and that's just a concern people are having and some ideas about why it's happening. So that's pretty much the roundup I got today, y'all. This is a shorter video than we've gone through, but yeah, that's what I'm seeing in the market, and I just wanted to share it with y'all, everybody. Just be on the lookout for the next video. I'll keep them coming as they come, and I hope your day is great. Y'all have a good one.